But let's concentrate on a couple of stocks in focus on account of numbers. Vedanta, in fact, is trading weak despite reporting what was a good set of earnings in the fourth quarter. Nigel is here with more details on that. Nigel.
Well, for Vedanta, actually, there are some concerns that are playing out. One is that the global markets, they have gone into a bit of a dizzy, so a trade war is not going to be good news for them. Besides that, the zinc market outlook from a deficit is likely to go into a surplus. So that's something that plagues the stock because they have Hindustan Zinc in their books, that's the India operations. And besides that, they have international zinc business as well. So that's the second factor. And also the guidance that were given, well, to most on the street, they believe that the guidance was lower, particularly for the aluminum business in terms of the production. They're not guiding for any growth in terms of production. In fact, they're guiding for more or less a flattish number out there. And the big concern is that at the parent level, there is a high leverage out there. So at some point of time, the parent could look to, pull out some money at some point of time. That's been the big concern, and that played out in the past quarter as well. So the street is cautious out there. CLSA, they have a sell rating on the stock. They've cut the target price to around 135 rupees odd. They highlight the slow ramp up in terms of the zinc as well as the oil business, and also increased costs, particularly in terms of the domestic zinc business. The concern over the related party transaction, that stands, and that's why they have cut their target price. Citi, they have a neutral rating on the stock. They highlight that at the parent level, there is a huge leverage in its books. How do the parent go ahead and service their debt? That's the other concern that they have highlighted. While Kotak Mahindra Bank, they still have a buy. They've cut their target price though to around 225 from around 275 rupees earlier. They believe that in fact, the volume guidance for the oil and gas business as well as the zinc business, is lower than what they expected. That's why they've cut their EBITDA estimates by around 8 to around 12%. And finally, JP Morgan, they have an overweight rating on the stock. They have a target price of around 300 rupees. Now, what they are saying is that, in fact, they believe that the guidance that's given, it's more realistic and it's conservative. In the past, they have been very optimistic. So they like that. That's why they're the only ones who have an overweight rating. Back to you guys.
Okay, Nigel, thank you very much for that. We're going to stick with Vedanta. My colleague Nisha Podar caught up with Srinivas Venkat Krishnan, Group CEO, and Arun Kumar, GR, Group CFO and Director of the company, and began by asking them about the recognition of the mark-to-market gain from investment made in Anglo-American PLC and the outlook going ahead. Listen in.
Just in terms of the market reaction, firstly, if you look at our results, very positive in terms of all of the verticals. We had a strong fourth quarter compared to the third. In addition, production across all of our key commodities went up, whether it's zinc, up 29%, silver was up 22%, aluminium was about 25%, and cost in aluminium fell down as well, and even oil and gas went up by 2%. So overall, the results were quite good and the balance sheet was strong. In fact, if you remember, the structured investment which we had through the Anglo-American shares, we did do that last time after following all governance procedures, and we did say it was going to yield a much better return. And this quarter's numbers have shown that that return has actually materialized. These two tranches of the structured investment mature in April 20 and October 20. There are downside protections at certain predetermined levels, which Arun can elaborate. And at that stage, the listed entity is fully protected in this regard. Do bear in mind, we do not own the underlying Anglo-American shares, nor do we have voting rights on those shares.
Just a commercial...
Purely an investment from that perspective.
Right. Are there going to be more investments? That's something that the street is uncertain about. A lot of your shareholders have raised that concern that on maturity of this structured finance, there could be more investments. So you have clarified it, but somehow the street is really not positive about it. How will you allay those concerns, Venkat?
Nish, very good question. And in fact, this did crop up in our conference call with the analysts yesterday. We were very clear. They asked us two questions, whether you would roll the investment out to a later date or whether you would do additional investment beyond what you have flagged. And we were very clear, saying neither of those will happen and they are not on the cards. We were pretty clear in terms of addressing those concerns.
Just to add one or two things from a data perspective.
Yes.
In this kind of a business, the sequential EBITDA and the volume growth is the most important. Right? If you look at sequential over quarter 3, EBITDA grew about 5% and the net profit actually grew 60%.
Right.
And stock price is something, it's a collective wisdom and we can't specifically comment on it. But again, if you go back to what happened on February 1st and 2nd or 4th, the two trading days after the results, the stock price completely recovered as of April 3rd. They were about 192, 193. I think the current sentiment is more about the overall market and the metal prices have been weak. with the China consumption being a little bit weaker, and the tariff wars never help metal stocks in general.
How are you protected on the downside when it comes to the cash that has gone from the listed entity to Vulcan?
The full protection on the downside, the principal is completely protected, and we have a protection of about 7% IRR on the investment. The current earnings at this point of time, as we booked a mark-to-mark, as you saw in our results, is actually well over 20%. So we've made really a good, wise decision or a call from a treasury perspective. But yes, it is fully protected.
But we do understand how mark-to-market really works, Arun. It is a positive today. It may be giving you a profit today, but it can turn into a loss.
Correct, which is why the 7% IRR is protected. What was the alternative? A 2% IRR on a fixed deposit product. So it continues to be a wise investment decision from a treasury or a cash management perspective. But yes, the upside is absolutely open, as you rightly point out. Downside is protected.
All right, so this is coming in as one of the concerns. The other point that I wanted to ask about is the net debt figure for the company. It stands at about 27,000 crore rupees at the end of the last quarter. Vis-a-vis on a QOQ basis, it is down from 39,000 crore rupees. So it's a straight down of 12,000 crore rupees. How has this reduction happened in just one quarter?
So excellent question. First of all, from an overall perspective, our net debt to EBITDA continues to be 1.1. It's been around 1 for the last 6 quarters if you have a look at the history, which sort of denotes a strong balance sheet prima facie. Right, in this kind of a heavy capital employed kind of a sector, 1:1 is a sort of a dream balance sheet to have at a Vedanta Limited level. And this also partly goes back to the observation that I had earlier in terms of the fact that we actually had a sequential excellent quarter. And when we ended quarter 3, we did mention that a lot of our working capital investments will pull back, and most of the capex we have spent in quarter 3 we had already spent on the oil etc. for the year, and hence we had a very high level of free cash flows. We had flagged off in quarter 3 that we will have an excellent cash quarter in quarter 4.
So 2,000 crores on account of the other income coming in by way of your Vulcan investment, mark-to-market gain. Then rest you are saying on working capital being released. Can you give us the specifics of that 12,000 crore rupees reduction?
See, broadly speaking, the working capital pullback would be 4,000-5,000 crores. The rest of it would be absolutely earnings. We delivered almost 6,500 crores of EBITDA, which is a 5% growth. So that's really the driver of this entire net debt reduction.
All right, and is the trend going to like this for the company? And also your finance charges, Venkat, has seen a slight uptick on a QOQ basis. On a YOY basis, it is quite a bit of increase. How is the finance charge going to pan out now that you're looking at a lower net debt? And how do you also place the growth capex coming in vis-a-vis the net debt situation? So what is the outlook you're giving for this quarter and the next?
A very important question, Nisha, and from our perspective as managers of the business, capital allocation is number one. Firstly, the business is a growth company and it also pays dividends. Companies either do one or the other. We do both. And we have delivered on our growth projects across all of the verticals, and most of the growth is actually self-funded. So our objective is to ensure that we keep tight control on capital. So the business has to earn the money first in earnings before it can spend the capital. And secondly, we put very high hurdle rates of returns before a capital project is approved. So in that regard, a combination of better cash flows from the business, strict capital allocation and staging of capital projects enables us to generate enough free cash flow to pay a healthy dividend and keep the balance sheet levels relatively stable. If you look at our finance charges and you compare it to the returns which the projects deliver, yes, there is an outflow in terms of finance charges, but it's on a smaller amount relative to our annual EBITDA, but the returns for the projects are much higher. So that's where we make the turn for the shareholders.
Okay, so that is the update coming in from the Vedanta management. The stock is down around 2.5 to 3 odd %. It has been flitting between these levels just through the trading session. But otherwise for the markets, 11,409, and in fact we're at the cusp of breaking 11,400 if we just about hold on for a couple of minutes, down around 88 odd points.